What's going on, guys? Woods here. I'm coming forth today with a supply anticipation video. So this is going to conclude the supply and demand series. If you haven't seen my previous video on seeking supply and order blocks via supply, make sure you go check those out. And before that, if you haven't seen the demand part, make sure you go check that out as well. We seek demand first, played order blocks via demand, and we were anticipating demand in that series. So make sure you go check that out. I'm doing the same thing via supply. And like I said, make sure you go check out the supply lessons before you check out this one. This one's going to be a little bit more advanced. So over here on BCH, we have, a little bit of a range here. And obviously, I want to explain to you like how you would analyze it as the price is, happening. So right here, we have a little bit of a range happening right here on BCH. Obviously, we have the range low here. We have this wick low, let's say, a little bit of deviation under. And now we're grinding back down. So maybe you're looking at this and you'd want to take a long. But when I see this, I'm looking at it and I say, okay, if we get a 4-hour close below this box, we then have supply anticipation. So what? Your invalidation is going to be above this wick. You can keep it super tight, or you can be safe and put it above that wick. And you would play it according to that right there. Obviously, you want to leave a little bit of room to DCA. So how I personally do it is I enter with half my position here. I give myself a little bit of room to DCA back into the supply box. About a 3% move up. So yeah, you definitely want to leave yourself a little bit of room to DCA so that if price does move up a little bit, you're able to get in that trade and you're anticipating the supply to react. That's why it's called supply anticipation. You're anticipating for it to react pretty much accordingly. So your stop risk above the supply box, because if price reverses back up, your play is invalidated because the supply is going to be invalidated, right? So the supply forms and confirms after the close below. Does not have to close below, especially if you're anticipating stuff. It's more risky regardless. So this one is just to confirm that you want to have a closure, especially when we're at a range low of a particular coin like this when it's super bullish. And like I said, leave a little bit of room to DCA, but we're going to go half with our entry there. And like I said, leave that little bit to DCA there. So when the price moves up about 2%, you'll fill the rest of your bids. And obviously in this scenario, you're not going to get those fills. And we'll target these previous highs right here. We may not get those. And that's why TPing, that's all up to you. But on this move down, we're going to target these highs right there. And just see how that play plays out right there. We're going to break. It'll actually retest. So you do get your entry filled right there on that wick. You see how it comes up, puts in that retest there? You do get a fill there. So you might get your whole position filled. You might get 3/4 of the position filled, but you'll get fills on that wick after filling half your entry on that market buy after the closure. And then it'll initially break down right away. So you're already in as soon as the break happens. And that's a 7% move down. And then you get a bigger move down. So you might not, like I said, you might not get that full TP that we're looking for, but you do get a nice move down out of that supply anticipation, netting you about a 10% move down, give or take your DCA. Then it'll come back up, it'll retest your entry, and now it's retesting technical supply. So just like I said, supply anticipation. So what's happening now? We're testing actual supply. So now this supply zone is a supply zone that people are willing to leave bids in and short for when the price comes back up. But you, playing supply anticipation, have already secured profit on the initial move down. You see how it goes different than playing technical supply versus playing supply anticipation. Now, just to see how this would have played, if you're playing this as a regular supply zone, you're going to play it a little bit different than you would the supply anticipation, meaning that you would probably, how I taught you guys how to do it is you would put your bids within the supply. You would measure your stop loss about equal to that supply zone. You would have a little bit here, a little bit here, and a little bit here. And just to show you how it differs away from the supply anticipation, there's 2 ways to do it. And that's the first, and then this would be the second. You see how it would slice everybody's bids up. So this is not to say that supply anticipation is better or playing regular supply is worse. Not at all. Supply is usually more safer to play than supply anticipations. But knowing your market, knowing the way you're going to risk, and playing things a considerable amount of time will then be able to form a system around that and play more plays in that fashion. But you see here, if you were to play that supply anticipation, you would have netted profit. If you were waiting for the supply to come back up to put your bids in, you would have gotten blown out of the play. And that's just the nature of the beast. It happens. There's nothing you could do for that. Not saying I would not play the supply. I would, if I'm looking at this play and I'm looking for a supply zone to short, this might be it. Gotta remember though, the price in BCH here, whenever we were moving up, was super impulsive, super bullish move up. And you're shorting a range breakdown and in anticipating the move to break down with this supply. and really not looking to short the reverse back up, assuming that it's going to flip back up to regain the range is what I would look for a long, to be honest. But that's just to show you the difference between the supply anticipation and the regular supply within that in that right there. So yeah, we already talked about this supply anticipation example right here. We talked about how supply was blown through right here. If you were to play it like that, and obviously the order block. So really, PCH was a good example of everything that we've put together in one specific range. Just a beautiful example of it. So now I want to explain this scenario and this reaction that comes forth before the breakdown here. You see right here how we have a good what seems to be supply anticipation, but we didn't get the closure down below. So if you're anticipating a breakdown, which is what I do sometimes you don't have to wait for a candle closure if you understand what you're doing, you understand what you're looking at. So this buildup right here is the same buildup that I was looking at right here that never confirmed and reversed back upwards to seek more liquidity and probably grab it before I move down. What happens here is the same scenario that happened here, but now the price is looking a lot more weaker. So even though we don't get a closure down on the 4-hour, you could still enter a short anticipating a breakdown and anticipating supply to form, because technically supply is still going to form even if we break down. You just might not get the time to enter it, because after a breakdown, you're not going to enter a supply anticipation all the way down here. That doesn't make sense. That's not what we're trying to do. Usually supply anticipation is supposed to be very, very cheeky. That's the reason they work more times than not. Obviously, the higher the time frame, the more the more it'll play out accordingly. But you see right here, we got that supply anticipation. You could have really never entered it the way that I would want it to, but you could have entered it right there, anticipating the supply to form, anticipating the breakdown. So you could call that more of an anticipating a breakdown, and I guess leaving a supply rather than supply anticipation, because the supply anticipation is one you would want to play rather than just watch happen. But I do this sometimes too. But like I said, this is more for aggressive, much more of a riskier entry than a regular supply zone or a regular supply anticipation in that. And now the price is going to move down some more. And right here is the exact scenario that I want you guys to pay attention to, because this is the one that that you would play with high conviction, right? So right here is one that you would play, and it would be a little bit more risky, obviously, because we didn't break down out of the range that we were in. And you're anticipating a breakdown right there, right? And it would have played out accordingly, obviously. But now this one is one that we got this low end of the wick. We broke down out of this structure. So the structure broke, right? So we get one confluence there. And we're not explaining structure. This is just adding confluence, because you want to see what are you going to do when the price comes here. We're not looking for longs, right? There's no reason to really look for long. Yeah, we're retesting the low end of this level, right? But there's no reason to look for longs here, because we're looking for a short. Why? We got the supply buildup. We got the 4-hour closure below that supply zone. So what did we do here? We confirmed the supply anticipation. So what are we going to do here? We're going to measure supply zone, because we always want to measure how much we're going to have to DCA if it comes to it. We don't know if we're going to get our DCA bids, but we want to measure the DCA just in case the price comes up, because what are we doing here? We're entering right away with half our position, because the price might not come back to retest. That's the whole reason why we're anticipating supply to form in the first place. So right on this closure, we're going to enter with half our position. We're going to measure. Okay, so about a 3% move up is how much we're going to measure. And the reason I'm measuring up to here is because I'm not necessarily looking to rebid the whole supply zone. Me anticipating supply like this is me anticipating that we're going to get a more aggressive move down than what we should. So technically, this is a clean supply zone, right? This is untapped supply, technically, other than this one. And people are going to rebid the supply zone. So they're going to put a little bit of their entry there, a little bit of their entry there, a little bit of their entry there. The reason I'm anticipating supply like this is because we didn't get a sufficient move down after the supply zone is formed, right? If we got to move down like this, then I would be more comfortable leaving a full amount of bids there, waiting for the price to come back up, rebidding that for a move back down. The reason I don't want to do that is because we might not get the full retest. We might just get a little bit of a retest right here for a move down there, and you want to get a full position. And I'm more than willing to risk that. So I'm going to enter half my position here, and then I'm going to enter the rest of the position up here, trying to DCA my entry up and hopefully getting a fill for the next move down. And we're going to target maybe even right here where we get that 4-hour. Yeah, that's where I would retest. I would target this 4-hour demand right here. Like I said, if you don't know what demand is, you can look at that in my previous video. And just to put into perspective, I'm going to actually draw this rectangle here just to see if that demand tags. Obviously, it's all hindsight. We saw what happened before. I'm not exactly sure what happens right now, exactly where the price goes from here directly, but we'll see. What happens to the price. So we have everything checked off, right? We got multiple confluences going hand in hand together. We got a break of structure. We got supply buildup, supply anticipation confirmed after the 4-hour closure below the supply block. And now we're just waiting for price to go. We know what we're targeting. And obviously we have targets before that because it's a bigger move down. And we're risking above the supply zone. So only a 3% risk. That's fine for me. Like I said, I'm not looking to rebid the whole supply zone because we might not get those fills initially. What I'm looking to do is put half my entry on right on the confirmation of the supply anticipation and look to rebid when the price comes back up with the rest of my entry. What I could say here is what you can do is you don't have to enter your position here right on the confirmation of the supply anticipation. You can look to enter your full entry right on the retest. That's fine. You could do that. You might not get a fill, but that's fine. That's playing it safe. And I do that a lot too, just depending on the aspect of the market we're in. But what I'm doing, like I said, enter half here, look to enter the rest on a retest up there, assuming that we're going to retest the previous structure and assuming that we're going to retest any of that supply. And in this scenario, it does. Obviously, we start to move down and then it retests beautifully, right? Look at that. Beautiful retest. Right before immediately rejecting. All right. So I want to bring forth how I perceive a chart and a few examples right here on this bell chart. Just scrolling through it just to summarize a lot of things we've talked about, but also just how you can really chart on a clean chart. So reactions happen around certain price points for specific reasons, right? So you can always, you could utilize points from years ago or you could utilize points from now, meaning that let's say there's a support line right here from 2 years ago. You can use that line, but price is going to react around that line regardless for some reason. So you don't always have to have something on your chart, even though it's good too sometimes. Like I do a lot of times, I have a lot of different charts, but there's just one good example of like how I would analyze chart. And then I'm going to show you a reaction thereafter of a little bit more of a riskier supply anticipation that you could have played anticipating the drop. So right here, we got this supply zone that turned into an order block. So this is a good point of reference. I'm talking about this specific zone right here. If you haven't watched that order block video, make sure you do so. You saw price went down, came back above, came back below, dropped down below it, confirmed it and rejected the price, came back above, price reacted around it, and look what happened thereafter. So we're looking to hold above. As long as we hold above, it's good for longs, right? Okay, cool. When price moved up here, it initially rejected and deviated. Were you looking for shorts or were you looking for a good long setup? Because in my opinion, if you're to take a short here or here, right, assuming the breakdown, you're not looking for that here. You're looking for a long at where? Your demand zone. We got a beautiful demand zone. If you haven't watched the demand zone lesson, make sure you go watch that as well. And we got a good means for entry right there twice, right, with a higher low. Okay. And then now what I want to do is I want to show you something. So like I said, price is going to react around a previous price point for whatever type of reason it is. So you're going to be able to draw something new. What does that mean? Just clear up my drawings really quickly and show you guys. So right here, we have the previous top here, right? We got a high on this candle closure. This is going to be a good point of reference for when price comes back to it to make a decision. Like I was saying, we have the previous high right here, right? We hold above here. It's good for longs. We come down, we sweep it, and we look to push up, and we can't with the lower high, and then we move back down. Now, we're resting over here with this 4-hour closure resting above, right? This is the 4-hour closure. So if you're assuming downside below this candle, you can anticipate the supply forming before it even forms. Even though it's more risky, you could do it that way because if we do break, you got to assume that if the 4-hour just closed, and it's not going to give people a sufficient time to enter this trade regardless. So if it's going to break down, it should do it relatively quickly, in my opinion. And that's exactly what happened in the price, obviously, because we know what happens. But what I would have done is I would have entered a short right on technical support and put my stop 3%. It's a beautiful risk return play, in my opinion. And we're going to look to target this little level of a demand pocket right there and anything thereafter. And this is another way to do a supply anticipation play without waiting for a candle closure, but it's generally more risky because you got to more or less predict the candle or really just what you anticipate happening, right? We don't want to necessarily predict these. We want to anticipate things happening. We're anticipating a breakdown out of this range with the 4 hour just closing. So it might not give people time to enter the short. Okay, we're going to enter the short now with our stop above here, because if we start to flip above, we got to just assume that we're going to look for a long anyway. We're not going to look for a short anyway. So we're going to look for a long on the retest there. So there's a play to be had anywhere. You just got to abide by your rules, abide by your system, and play your plays accordingly is really what I would say. And then obviously right here, we know what happens. The price rejects right away. Full TP hit in one candle. That's crazy. And then the price comes back up. What's it going to do? So when we get a reaction like this, what do you think Woods is looking for? What I'm looking for is a retest of supply. Because now we got a move down, followed by a little bit of support to hold the price up, followed by another move down, which we anticipated. That's why we entered that short, because we anticipated the breakdown, and we profited hefty off of it, right? And now we're anticipating the price to just come right back up, retest structure, before eventually falling down after retesting the supply and structure. And that's, I mean, what I assume is going to happen to the price. And what I think happened, I forgot exactly how it played out, but I know it retests somewhere above there. It comes up, has to retest once, doesn't, should come up and retest again if I'm not mistaken. If not, then it's just not. Yep, there. It retested one time, 2 times, and there. Full retest of supply before eventually nuking back down. And that is a general wrap-up of supply. We seek supply. We played order blocks with supply, right? After the order block sliced through, we anticipated supply 2 different ways. There's one with candle closures and one anticipating it happening before the move even happens, right? That's a generally more risky way to anticipate the supply. And then you just play your system and you just act on things accordingly, right? So there's multiple ways of playing things, multiple ways of doing things. You just got to play things to your system, play things according to that, and do things consistently throughout a long period of time, and you'll be able to see what is profitable, what is not, and how to really allocate your system accordingly, and play things properly.